All right. Hey, good morning, everybody. Happy Thursday. Welcome to Forex.Today. It is Thursday, March 29th, 2018. This is your daily Forex strategy session. Namaste. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Nice to meet you. Put your diamonds in the sky. Whoop. Put your diamonds in the sky. Huh? Thank you very much for being a client. We really appreciate you. We care about you. You're my sweet baby. See, look, it's a symbiotic relationship. I'm here every single day to teach you technical and fundamental analysis, give you the skills and confidence to survive and then thrive. This is sort of Trader's Way's investment into you up front in hopes that you gain these skills and confidence, and one day you will be ready to trade real money. And at that point, you will choose, out of loyalty and respect for what we do here every day, you will choose Trader's Way as your prime broker to your successful Forex trading business. You will trade every day for weeks, months, years into the future. You'll slowly grow your account size, slowly increase your lot size. Isn't that nice? Sounds like a fair deal, right, Martin? Isn't that great? It's a beautiful business plan because it starts with the heart. So let me fire up the charts and let's get going, huh? Are you guys enjoying the instant replays? That means as soon as this is over, it plays again on YouTube and it plays live. It streams live, so it's an instant replay. That means 60% of the time he watches it every time. That's cool. Yes! Good man, Wes. So I haven't slept much, so if I'm off today, well, I apologize right now. Yeah, it's like 2 Waynes for the price of 1. Yeah, Wes is like, hey, Peter Ward has to get up at 4:30 in the morning for these webinars. Thank you, Mr. Ward. All right, so yeah, Pizza Pro. Pete just looks like a professional, so you just kind of like, hey, Pete, I don't know what you do, but you're in charge. Pete's probably one of those guys where he's walking through Home Depot, minding his own business, and people come up to him and ask him, "Hey, man, do you know where these sprockets are?" Aisle 18, bro. Aisle 18. I made the mistake one time. I wore a fluorescent orange shirt into Home Depot. And people are like coming up to me and I'm like, you actually think I work here? Like, just because I have an orange shirt on, you actually think I work here? Then my wife walks in. Boy. Everyone wants to help her. All right. So anyways, boom. You could have checked this out. Microphone check 1. Why do we use pivot points? Wes, yeah, that's interesting, Wes. Is that an actual theory? I believe it. Yeah. Yeah, they work. Yeah. Yeah. So The way I teach you is that you're supposed to take profit here, right? And that also, if you're a shorter term trader, offers you a counter trend. Isn't this funny? Imagine the frustration of trading without knowing that it's going to stop. It must be a horrible thing, right? Does anyone remember trading before they knew about pivot points? Or more specifically, before I taught you how to use pivot points? Those are some dark days, right? Them some dark days. And so it came down, and the part, the part that I like to reinforce is it came down because it was supposed to, and that's cool, I think. Look at that. When you put it in that perspective, right? It's truly amazing, isn't it? There was a time for using pivots. There, I don't know. I'm just going to just leave it at that. But just imagine you didn't know this either. Does anyone remember those days? Right? So these are very simple rules of engagement that I've taught you over the years. Many, 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 many years. Over a decade, right? And that this is incredibly tradable. And as you're going through this, you're thinking you want it to fall. You believe it's going to fall. And when it does fall, somewhere around here, you're going to buy it. That's the cool part, right? That this area here, I guess I should use red. It's this area the whole time is your buying opportunity. And then the very cool thing is this whole time, that's your expected target. And by and large, it worked. What happens now? Well, it's a whole new setup now, right? So you have this choice. If it makes a lower low, retraces to the 200, then what? Well, that would be similar to this, wouldn't it? So if that happened, then you want something similar to this, which would be like that. And then your next plan would be this way, right? One thing you might want to be cognitive, however, is what is the overall trend? What is the overall direction? What is going on the higher time frames? Because they're not likely equal. It's not as likely to go up as it is down. One of them is more important, right? So we're basically at the last day or second last day of the month. At the beginning of this month, this is the entry for a bull, right? And this is the target. Not the red line. The red is weekly. I'm looking monthly. So how did we do in general, in your opinion, as a bull? This was the expectation for the month. Is that reasonably accurate? Okay. Now the flip side of that is if you were bear, you only one day of the month were you set up to sell, and that was the first day of the month. right? That's not a sell. That's not really a sell. That's not really a sell. That's not really a sell. It's beautiful, isn't it? Okay. Is anyone a bear on this, though? I mean, maybe not up until now, but is somebody interested in buying Swiss francs, selling US dollar? You can be. Remember, I wouldn't want 100% of the people to think one way or the other. Brooks isn't. Okay. In that case, Brooke, check this out. Your setup is now. Oops. Okay. Your setup is now. If it turns south, that's your trade. Okay. So now you go to the 15-minute chart, and if you can sell this either here or here, the general strategy, if you will, not the tactics. The tactics is actually selling this or selling this. The general strategy would be to stay short for the entire month of April or until you hit S2. Next month's S2. Okay. Which is a risk for bulls now, isn't it? So what do you think? I think what it might try to do first is spike up and then do it. But that's just sort of the same thing, right? See this? Let me remind you, on the first day of the month, tomorrow's the last day of the month. On the first day of the month, this was the target for the projected high for the month of March. And on the second last day, we're just a lamb shakes of a tail away from that. Isn't that interesting? So couldn't it pop up here first and then do this? I think it could. It's amazing how we get near these targets like within that 48 hours of the end of the month. Quite a coincidence, right? So there's a thought. Okay. Held up at M2. This one we already knew, right? This is on Tuesday we talked about this. And I bet you even when we talked about it returning to the central pivot, it was hard to believe that after all of this move, that it would do all of this. But that is the rule, isn't it? Yeah, James says don't forget to calculate the carry. Generally, right now we're in such a low yield environment that what's it going to cost you? 2 pips a day? I mean, it still adds up though, right? Because that'll be 60 pips. Oh, you don't like the... How's that, MVO? Just hanging out in Nomad's land, huh? See, I look at this and it seems to kind of be ignoring the weeklies and respecting the monthlies, right? I mean, you mean like a Sharia account? Give him a call. I really don't know. Oh, well. I didn't know you guys were trading hundreds of millions of dollars per trade. That this was a significant carrying cost. I am taking a course this summer on Islamic law and finance. I think it'll be very interesting. Well, because according to Sharia law, you're not allowed to earn interest. But I'm not an expert yet because I haven't taken the class. Why, Kitty, you looking for a job? Listen up. I wasn't sure what she was saying, so it just, yeah, no disrespect, no disrespect. I wasn't sure what you were saying. Yeah. I missed the other comment. I must have, but anyways. So, all right. So big on the monthlies, right? Maybe this has to do with fundamentals, or other. Makes me think maybe it's because it's so related to oil. Okay. So can you see what's going on here? This top, and it's very specific, isn't it? Oops. This top here is very specific. It's exactly to the pip. And that suggests the bottom of the month is here. So you have to decide, is this bounce that we've had a move up, or are we going to come down and hit the target? And honestly, I don't know. The reason for that is if you are a buyer here, so let me drop all the way back to the 15. If you're a buyer here, if you're a buyer here, you probably want to stay long for the entire month of April. Well, anyways, Katie, I'll take the class. I'll let you know in July. Huh? So this could be, you could end up being long this not just April, but all of May as well. And the interesting thing is that this price level is very specific. Okay, and I'm not even really paying that much attention to this. The reason for it, this big pivot here, well, the top of the month predicts that we're going to drop lower than that anyways. So I don't really care about them, right, about it. But it's approximately where the buy zone for next month is. So we may not get down to M1, which is our conservative target, because we've run out of time. Right? There's today and tomorrow, and then it's done. This pivot goes away. So on an hourly chart, we're here. On a 15-minute chart, we're already through, and we're testing the 4-hour now. This is the only thing holding us back. So when I analyze this on a 4-hour, if I'm a bear, this has to hold. And if it does, then we're going to March M1. If it doesn't hold, then we're on our way up for, could be 10 weeks. Could be 10 days, could be 10 weeks, it could be 10 hours, we don't really know. But the way I would manage my expectations if I was a bull was to stay long term, give it room to breathe, and manage the risk accordingly. Aussie versus US dollar. Yeah, James says it was his plan all week. And if you were a portfolio manager that can only buy this, then that's what your week is going to be like. You might have to wait days for an entry. But then again, that's your job. So, right? So I think that's cool. It may be long. Okay. So let's move over to like the yens, I guess. We'll take a look at them. Okay. So on Monday, we said there was a good chance all of these things would be up, and not just up, but up for 10 weeks. Euro yen has had a bullish week. Dollar yen has had a bullish week. Aussie yen has been up and down, but generally more bullish than bearish. Pound yen, let's move this. Okay, more bullish than bearish. CAD yen more bullish than bearish. Kiwi yen more bullish than bearish. We nailed that, right? The interesting thing is the conversation actually last Friday, where we were setting up Monday's trades on Friday, and I think all of them worked except this USD yen. Oh no, actually no, it did work. Sorry, I was looking at this, but it did work here. Right? Remember, we're talking about the green zone. We're talking about the green zone. We were forward planning the pivots and stuff. Pretty sweet. But we still don't know if it's going to go up long term, but it could, right? Even though we're shorting Japanese yen pairs since the first of the year, isn't it great knowing weeks and weeks and weeks in advance, somewhere around the first week of April, we'll probably stop selling those pairs and start buying those pairs. And on that last week, they start going up. It's kind of fascinating. All right. What are we going to do now? I guess we'll start with gold. Okay. Just kind of did its thing, didn't it? Nothing major to report. This isn't the pivot. It's just resistance. So we drew that resistance and it collapsed. It's interesting, right? Didn't have a big bullish week, didn't have a big bearish week. In fact, we started the week at the same price we ended it. Well, it feels like the end of the week anyways. See you, Brooke. So I don't really have anything to say about that. It's neutral. We're near the central pivot. Didn't hit a weekly target. It's a quiet time. I think Aussie dollar we did, right? So the peso, that's something that we're supposed to be looking at for a sell now and next week, right? Well, last month we set this up for a sell. That's right. That's the first week of this month, I should say. And our target on that day was here. Pretty amazing again, right? Are you guys starting to feel that it's possible, like success as a currency trader? Like once you just kind of get the pieces put together, it's very possible to do this as a career, that the market does move in predictable ways. She moves in predictable ways. Oh. You've been living underground, eating from a can. You've been running away, don't understand. Patience, discipline are the hard parts. Yep, absolutely. Well, I think that you have to believe it's possible first, right? Otherwise, you never fully commit. So I think that's a big part, right? And once you fully believe, then I think it's more attainable because it's real. Right? So I think that's so important to believe that it's possible. And then it's up to you to fight, right? But you're not you're not going to win something when you believe it's impossible. Like, for example, in my management class at Harvard, we're talking about framing situations where we were doing analysis of whether if you had to close one factory and 2,000 jobs were saved, but by doing so you ended up saving 4,000 jobs, and you do all this kind of stuff. And then we was in a different situation, and because the situation is slightly different, it goes from saving 4,000 jobs, losing 2,000 jobs and saving 4,000 to just sort of the lose. I guess the way to explain it is one way, even though they ended up essentially being the same scenario, one way your brain perceives that you're saving 2,000 jobs, and or just saving jobs, and in a different situation, your brain interprets it as that you're losing the jobs, and your behavior changes dramatically. So, for example, you go into a "I have nothing to lose" attitude subconsciously, even though the two scenarios are generally the same. Especially, I've taken game theory classes, right? So then you can bust it out mathematically. You can say, well, it's the same, but the way you interpret it is so different. So how do I speak in English? If your brain doesn't think it's likely, or even worse, it thinks it's impossible, it changes everything in your decision-making process, in particular, your emotional side. Right? Don't say paradigm shift. You just lost a full letter grade. If you're going to throw down paradigm shift, you have to quote who said it. Well, as Stephen Covey said, this is a major paradigm shift in thinking. Yeah. So anyways, it's critically important that you absolutely 100% believe it's possible. And everything else will change. Intellectually, spiritually, emotionally, and then even physically, as we were talking yesterday about reprogramming your brain and stuff. So that's why we do a lot of this stuff where I'm like, look, that's a predicted top. The way I teach you, I don't know what other people do. Remember that. I don't know what other people do. But my experience has told me in this situation you would sell, and this would be the target. Now, the cool thing is, days and days and days and days and days and days and days before this, we were getting ready. We already knew in our minds it was going to fall. Not this day, not this day, this day. That's a whole nother level, okay? But just using technicals, if you were a bear, it played out like exact. So if it played out exact, And we could talk about days and weeks in advance and then be there and trade it. If it's that predictable and that precise, really, to me, the precision is important, then you should be able to trade it. And at some point, you'll just get to practicing the ability to trade. You're not figuring things out. Do you like ADX? Do you like CCI? Do you like this better than that? What about the Ikamuku, Ochinoko, Muku Muku? You stop all of that. And you're like, this works. I can do this. And off to the races you go, right? So I hope you get to that point. Sometimes you have to fail a few times to realize what you're looking at, right? Yeah. I saw a t-shirt the other day. It said, think less, stupid more. And somehow I just think that's really clever. It's that pattern on a 5-iron job that is. Oh, yeah. Well, so Kyle brings up a point. The fractal geometry of it. Well, that's why you start with the strategy, though, right? And then what I would do, Kyle, in that situation, is in the past, like when I used to mentor people, I would do something like have them make like 3 trades. When you're ready to make that trade, make 3 trades. Put like a let's say a 50 pip stop, 100 pip stop, 200 pip stop. Okay. And maybe 50 pip limit, 100 pip limit, 200 pip limit. So the risk is always the same, right? And over the course of time, which one makes more money? You know, that kind of analysis blows you away because most people have never qualitatively analyzed their own trading. So I say, are you a good trader? You're like, I don't know. I'm profitable. Is that good? Right. I remember years ago I got heckled on a non-farm payrolls thing. He's like, Wayne, I'm the greatest trader in the world. I made like 40 pips on that trade. And I'm like, you made 40 pips? Like, you moved 400 pips. Right? If you look at the move 400, and you're happy you made 40, right? Well, so now it's qualitative versus quantitative, right? He's happy because he's got the 40 pips. But qualitatively, you left 360 on the table, right? So it's interesting to analyze yourself that way, and therefore it kind of gets you off the 5-minute chart. You see that, Kyle? And then, Kyle, what happens if what do you do if 70% of the time you lose money on the 50 pips, but 70% of the time you make money on the 200? Yeah. Well, no, Craig's got it right. Your entries are piss poor. Your analysis was correct, but your spot trades suck. You see what I mean? So that means you're entering about 70, let's say 75 pips out of position. So if you can correct that, whatever that is needs, whatever the correction is, and usually you're chasing prices. Usually what happens, you see a couple of red candles, so then you sell. But what you're supposed to do is sell on green candles, not red candles, right? So you end up, and you're probably just in early, right? So you have to wait for the pullback. But once you wait for the pullback, does it change the position of your stop? It shouldn't. So now your let's say your 200 pip stop, which might sound ridiculous, right, is now 150 pip stop. Plus you're going to make the extra 50 pips profit. So now your risk and rewards changing, but also bear in mind 70% of the time you were making the 200. Well, now 70% of the time you're making 250. So now you have a 150, 250 OCO. You're risking 150 to make 250 pips, and 70% of the time you win. So 70% of the time you have 250 pip wins, and 30% of the time you have 150 pip losses. You're going to find that that's very profitable. And if you don't like the numbers, if those numbers are too big, just adjust the number accordingly, right? But if you qualitatively analyze your trading, I think you'll be very surprised what you find. And I think you'll find that you're a better trader, except you get in your own way, to quote another YouTube song. No, you're actually a better trader than your stats show, because you screw up your own good trades. Is it loud? Yeah, I apologize for that. Yeah, still here 6 years, Carl. Hey? Yeah, cool. Well, I apologize for the noise. I mean, I don't see, like, everything I see is longer term. Get out of your own way. Well, cool. All right, let's take a look at this one. We are expecting yen strength to soon come to an end. Okay, so he's looking long. Okay, okay. There's zigzag on there. The moving averages are fine. I'd almost ribbon this if you got so many moving averages. I don't know what all these are. So monthly pivot. So if you have a monthly central here, your target's going to be even lower. So that's Aussie yen. So one of the things you should be watching here Oops. Is the moving average crossovers and stuff, right? So what is this MACD telling you? Oh, Kyle, you opened up a Trader's Way account? Cool. Appreciate that. Well, it's telling us that the 21 and 55 EMAs are converging. Oops. That this distance is more than this distance. Okay? And we're trying to gauge at some point if they cross. So if you're kind of hoping, I think all these blue lines is that you're hoping for something like this. The first thing you're going to see roll over is the moving average of the oscillators, maybe diverge. Then the moving averages converge, and then the smaller ones should cross over. And you're looking for price action this way. So I would start to look at what key moving averages you think will break. I'd look left and say which one of these old supports will act as the barometer for a break. Right? What I mean is, if it breaks this, are you a bull? If it breaks this, are you a bull? If it breaks this, are you a bull? Right? When do you start buying, right? So this is a decision-making process because, as you can see, this has been down for 4 months. When do you start buying? And that's really the process. Another thing that helps me in my confidence would be if these pivots are pivotal to you. Are you buying a weekly swing? Well, maybe the weekly swing turns into a monthly swing, and so on and so forth. Okay. So I'm not sure if this is 21, this is 55, but all right. But anyways, so you can see already something going on here. So these are not 2155 EMAs. These are like 100 and 200 because you can see, okay, the MACD is above the water line, so the 2155 has crossed up, which tells me the 2155 is in here. So this must be like 100 and 200 EMA. Okay, but you can see some of these things have already happened. When do you start buying dips, if at all? Right? You can see we've already gone through this area. So are you a buyer of dips? Because that's what it comes down to. When you say, okay, I got it, we're through the resistance, I'm a buyer of dips. Still got to get through this one, right? You know, this stuff. See, the stuff that bugs me about like these little indicators, very often I'll ask somebody like, well, how do they determine that it's down on the 1 hour and down on the 4 hour? What is actually used to make that determination? 99% of the time they say, I don't know. I don't know what they use to calculate that. And it could be so lagging or leading that it could be worthless. I prefer just to make the decision myself. What indicators that? Yeah, I have no idea, right? I mean, it could be a MACD set at 12, 1836 or whatever. uh, 12, 12, 18, 9 or somewhere. I mean, who knows? I mean, so just be careful. Just you don't need that, is what I'm saying. Okay, same thing. Use the price action. Are you setting up as an inverse head and shoulders? Okay, this one's moved even a little bit higher than the other ones. So you can start doing relative strength exercises, but this has already acted as support. Remember the other ones, they hadn't even broken that. This is already broken out, pulled back. Okay. The moving average has not crossed over, however. Not the, again, I look at MACD, but I know what MACD is calculating, so I'm looking at the moving averages. I can't even see them, so I believe the 2155 is this little line here, and then this bluish one there. I believe they're neutral. They're basically the same, and so is MACD. And this one's set for some reason on at 9. Mine is set at 2155.8, so that they're all Fibonacci numbers. But the 9 wouldn't matter. It's funny if you're going to copy mine, you can copy it. All right, all right. And what do we got here? Yeah, bigger pullbacks, right? You see some of the Asian currencies were still quite low. We have significant pullbacks here. Looks like, again, all the way back in the 100-day moving averages and stuff. So right now, we don't have higher highs. I would make this sort of neutral to up. Okay. But if you're using like weekly and monthly pivot strategies, like swing trades, for example, you're going to try to combine those. So like next week's buy, or going to try to combine them and get something like that. Is that what these blue lines are? The specific areas of buying? Having said that, for me, I will be looking bullish reversal patterns and oversold conditions around these blue areas for support. Yeah, yeah, yeah. It's kind of hard to analyze why. I mean, I suppose there's sites and pivots and stuff, but that's fine. Right? So, like, if we're analyzing that, um, yeah, I like this as a buy. I like this as a buy, but I'd probably not buy this because it's 100% pullback of that move. That doesn't get me long. All right. So for example, higher high, higher low, higher high. That's one thing. But if it goes higher high, 100% pullback, now I don't know if it's this or this, but I don't think it'd be the higher because it should have already done it, right? So I think there's one too many buy zones here. So to me, it's almost like I want to buy this whole zone, or I want to buy this. Okay. Okay. And I think all these setups have a similar situation. Like, well, this is mediocre. Yeah. The same, yeah, they're all, I mean, if we're going to look at it that way, some of these are not that great. So I'm going to try to treat this like this. And if it doesn't do that, I just kind of want to bail. So there's that. Okay, treat this like a double bottom. Okay, so you want to do something like this. That's fine. Looking left is great. Catch the fib, catch next week's swing. Yeah, I'd even be disappointed down here, but that would be sort of the next one. Okay, so it looks like my prices are further apart, and I have bigger zones. So I see like two lines here, I think, indicating individual buy zones. For me, that's one whole buy zone. Like, if this doesn't go up off of that, then I'm very disinterested. Okay. So it's really how you interpret these buy zones. Okay. So again, this is a higher high. So it's got to come down. It's got to come up. So now that you're higher than this, yeah, you're going to look left, bring this across, all this kind of stuff. Yeah, this whole area here is one buy zone. So for example, have it come down, buy it, put your stop below here, walk away. And you might be in this a long time before it moves. Okay? Yeah, but not yet. So if you get down here, you already know you want to buy. And then you move into the smaller time frames, and that's where you use 5A crosses and stuff like that. So they're okay buy zones, but they seem there's too many and they're too close. I'd rather you cut your lot size and double your stop. It's all pretty good. It's it's a complicated thing to do, Shaw. So I like it. Thank you very much, Shaw. That takes some time and thought process. Marina, what kind of junk mail are you getting? Marina's not around. Too bad. I'll see, because it wouldn't be coming from us. Loads of junk mail. That's not from us. Oh, but so what does it say? I mean, help me out. What is it? What are you getting? Or how about this forward it to Wayne at fxbootcamp.com. Thank you. Yeah. Yeah, it shouldn't be. I mean, there's no real way that I know of that it would be possible, but send me an email or forward me the email so I can look at it and figure it out. Okay, cool. Well, let's go. It's been a wonderful day. Thank you for being on my team. Thank you for being here every day. Thank you for posting it on Forex.Today. If you're watching a recording on YouTube, please give it a like and subscribe. Uh, so we just recorded this live at Forex.Today at 7:30 in the morning. About approximately 9 in the morning, it's replayed live on YouTube. So you can catch an instant replay, and you can chat with us and stuff as well. So I'll get that going now. So in 20 minutes, the webinar will start again. Same webinar um, on YouTube. And then, of course, everything is posted, right, on Forex.Today. So you can subscribe on YouTube and it'll let you know that the video is started. The other thing you can do is you can follow me. And when I upload a video, Forex.Today will let you know. Okay? So, yeah, I will. No, Amelia, I think it'll be a fine day tomorrow, so don't worry about that. So I'll be here tomorrow as usual. The Pope won't be here, though. He's busy. So it'll just be us. But I'll see you tomorrow, and I'm looking forward to a fantastic Friday with you. So again, peace on earth. May the pips be with you. May your profits be above average. Yes, tomorrow. I will see you tomorrow. Cheers.